Hello and welcome to the April 14th edition of the Gold, Goats, and Guns Market Report. My name is Tom Luongo. We've got a lot to talk about. Happy day before tax day. I hope everybody's got their taxes either done or not. I don't. I've been putting it off because, God, I just hate doing it. I've got a bunch of stuff to do this afternoon. I'm going to try and write something real quick this morning, maybe do a quick live stream, and then after I upload this, and then it'll be all IRS all evening. Camille's out of town, so I don't have a lot of distractions right now. So frankly, no more excuses not getting it done. All right, so let's get to the commentary. It's been a big week. There's no other way of putting it. I know many of you have been following the things on the live stream, on our live streams and whatnot, and there's just no easy way of discussing what's happening right now in any way other than say that it's all bad. And a lot of it has to do with, again, at times, my thoughts on this are very complicated. So I'm trying to put it all together in a relatively coherent fashion. And the longer I think about what's happened with Julian Assange, I wrote a big article on Friday about it. What I think is going on here is it's all stuff that has to happen now. Where I was just reading an article over at South Front, or is it Fort Russell? I think it was South Front, about the ratcheting up of tensions in the Kerch Strait and Black Sea by the United States. We have the betrayal of Brexit. We have the removal of and arrest of Julian Assange. All of this stuff has to do with the very same people that have been involved or that were foisted on Donald Trump from the beginning. And one of the major ones is Mike Pompeo. And I think Moon of Alabama, and I'll put a link to the Moon of Alabama article in the article on Patreon about this. Bernard over at Moon of Alabama had a great rundown of the history on this, and that he firmly believes, and he may be absolutely right about this, he firmly believes that what the timing on this with Assange has to do with the release of the Vault 7 files in 2017, which exposed the CIA in a way that is that has not been done in 40 years. And that this whole affair with him, that they would have been happy to leave him in the Ecuadorian embassy until he died, until that release. And that was the straw that broke the camel's back, and that's the one that needs to be dealt with. That's an interesting theory, and I can hear arguments and counter arguments against it. But for someone as obviously, Mike Pompeo is not very deep, and I think that he's a very aggressive and very reactionary man, and I think he's a hyper emotional and easily. I think he's hyper emotional as well. It just seems that the way he is arguing everything in foreign policy, from his time as Secretary of State to his time now as his time as the leader of the CIA to now Secretary of State, it's very obvious to me that there's something not right about Mike Pompeo, and that he's I don't think he's very bright. And I don't think he's, I think he's, someone who enjoys taking revenge and is one that is thoroughly and utterly subsumed with the idea of the primacy of the United States government. And that drives everything. And any threat to that, to him, any threat to the workings of the United States government, to him is an existential threat that needs to be stamped out. And that's why he is so in lockstep with John Bolton and the rest of them. That's why he's risen to the highest levels of power. It's not because he's loyal to Donald Trump. It's not for any of these things. It's because it's who he is, and he's the perfect tool. He's not quite that bright, and he might even believe in all of this stuff. And that should scare you more than if he's someone that they have control over through blackmail. So, at the same time, all of these plans are being put in place by people who are inept. Pompeo, for all of his, for all of this, is inept. As a diplomat, as a negotiator, as all of that. But I don't think he was put in charge of state to be a diplomat and to be a negotiator. I don't think that's the case at all. I think he thoroughly, and Trump is the same way, he's a price setter, and they view the world as, or price maker, and they view the rest of the world as price takers. So they're going to tell the world how they're going to operate. They're going to tell the world how to behave itself. And if you don't, then you're going to be punished. And that's all they understand. Pompeo only understands punishment. He only understands that. He only understands revenge. And that's just the way it is. And that's who he is. And until that changes, until he's no longer in power, that's the way it's going to be. The sickening display of what we saw this week from the British conservatives, the American and bipartisan American political support here in the United States is very telling. It's telling because every one of them is scared to death of what WikiLeaks has already exposed and what they could expose. And don't think for a moment that most of the people in Congress are well informed, because they're not. Don't think that they're the smartest people in the room, because they're not. Even people like Lindsey Graham, I don't believe Lindsey Graham has half of the information that we think he has. And of all the people in the world who should know what's actually going on in this world, Lindsey Graham is one of them. And I don't think he knows anything. I just think they know. I think he is so thoroughly compromised that they can get him to go out there and say whatever the hell they want. So we have Assange, and then we have Theresa May, in effect, selling the Brits into vassaldom of the EU. While the length of the extension on Brexit is only 6 months, the terms are that the Brits don't have any rights within the EU from now until after the European parliamentary elections, and even after that, during the entire time she has sold them completely into the vassaldom of the EU for the next 6 months. And when October rolls around, and if she's somehow still in power, which I don't think she will be, they'll do it again. And anybody within the Tory party who's likely to take over will do it again. And Brexit delayed will be even more time for them to erect infrastructure that will not allow them to actually leave. And that's the plan at this point. It's insane. At the same time, the German Bundestag is actually considering a bill. I saw this morning about Zero Hedge and Martin Armstrong, that they're considering this bill to expropriate property that was sold by East Germany after reunification back in the 90s, and to take that property back because it wasn't theirs to sell. So this is effectively reparations to give it to people who can't afford housing in Berlin now. If as Armstrong pointed out this morning, if you think that that's not going to have a chilling effect on any kind of investment in Germany, then you're crazy. This is the kind of thing that they can't control. They ultimately can't control all of this stuff. I mean, when I talk about the forces of control or the Davos crowd or all of this stuff, I'm saying we got to remember something we talked about in the issue a couple of months ago when I said there is no plan B. I wrote an entire issue built around the idea that these people are all think they're in charge, and I refuse to say these are the people in charge. No, these are the people who think they run the world. They actually don't run the world. But they have a God complex in thinking that they do. And then they unleash forces that they can't control. And the more they try to control those forces, those secondary and tertiary effects, and things like Google and Facebook and even to a lesser extent Patreon and others, that's the whole and the media obviously is all of those systems. Twitter are designed to rob you of your reason, rob you of your perspective, and flat out just keep information from you. Try and do a Google search on a picture of Julian Assange right now. I'll give you a perfect example. and try and get the picture that's up on the screen right now. You can't. DuckDuckGo? No. Bing? No. Google? No. None of those image services will show you, will give you any of these pictures and a link to the articles that use them. These pictures of Julian Assange during his arrest are not available. You have to go to the article itself, screen cap it, copy it, and then distribute it yourself. And then, of course, you'll be in violation of some stupid law, some stupid rule, which they can't control either. Okay? That's the kind of thing that we're dealing with right now. Okay? And so the markets don't know what to make of all this. And I think this week's market action is pretty obvious. I'm going to show you the common theme. I was putting the slides together this morning. I'm like, what's the common theme to all this? And what are we talking about today? What's going on? The bullet point about Egypt is a perfect example of what happens of a complete failure of Pompeo and Trump approach to diplomacy, which is Egypt just rejected the biggest military in the Middle East. Just rejected Trump's idea of an Arab NATO, which is, again, a very important part of his, peace plan for the Middle East, which is not a peace plan at all. It's creating a framework from which we're going to see the next phase of Israel's expansion in the region. That's what this is about. Israel, Saudi Arabia, and the rest of it. And how Israel has made its peace with radical Sunnis to get what they want. That's what's coming. That's what's already here. And if you look at the countries that have signed up to Trump's, Arab Security League, or whatever the hell they're calling it, Arab NATO, that's what we're dealing with. Jordan, Qatar, Saudi Arabia, Bahrain. And they wanted Egypt. They're all Sunnis. And it's the Israelis plus the Sunnis versus the Shias, and that's the rule. Now, at the same time, Lebanon said no. The Iranians are building a highway across Syria to connect to their port, to the now leased port in Latakia, in Syria. It's we're losing, and I don't know, who's actually behind Haftar in Libya, but none of it's good. I still don't have a good handle on what that, even though we talked about it last week. I brought it up to you not because I have a great understanding of it, but because I wanted you to think about it and, keep it in the back of your head as to what's going on. So, yeah, this is just, every day is another crazy set of headlines, and every day is another crazy set of data points, which tells you that everybody is trying to assume control, and nobody has control. And under situations like that, markets eventually break. So, all right, let's get on to the charts, and then I'll get you out of here. All right. So, gold is completely uncommitted to going forward. It's completely uncommitted to going down. If you were to draw, if you're a trend line kind of guy, you draw a trend line here and a trend line there, and you've got this kind of almost flat bottom wedge, and those are usually bearish patterns. Can't go up. It's coiling in a way that it can't go up, but there's more selling, constantly pushing the pressure down, pushing the price down. The rally this week failed on Friday. That's not a good sign. We couldn't even close above this this down bar here to throw a technical reversal. There was a little bit of a potential for a reversal signal here that failed, so this is really weak. But at the same time, there's still there's now more support forming up in this 1275, 1290, this range right here. So anything below, any weekly close below this number, I don't know quite what that is, but you can look it up. It's probably around, looks like be about 1275, 1276, depending on your data source. And I use investing.com. We'll easily see a move back to 1250, and could easily be a move to 1250 that is, within this kind of parallel channel here, and would point to a move down to 1250 at the same time over the course of the next couple of weeks. You've got bad pot odds for this week because of Friday's weak price action. So gold doesn't know what to do. Again, is it dollar liquidity issues? Is it, what is it? I think it's got dollar liquidity issues. The euro rallied on Friday, back above $1.13. Now, it's not to say that $1.13 is actually a strong rally in the euro or anything, but we also saw, we saw an outsized move to the downside in gold for a small rally, for small 40 pip rally in the euro. So I don't know. Gold looks terribly, almost terminally uncommitted here. So we look at the U.S. Treasury yield curve. I hadn't looked at it in a couple weeks. And was interested, again, I bring these things up to you, and then I will kind of ignore these ideas for a couple of weeks, and I'll come back to them later because there's so much stuff to take in. But at the same time, I want to see, I don't want to watch the twists and turns and the daily machinations of the U.S. yield curve, because if I do, then I get caught up in that, and oh my God, what does this thing mean today, and what does that thing mean tomorrow? No, it's better just every month or so check in and see what's happening. And here we were a month ago when the yield curve first went through its big inversion, and look at where we are today. We're still there, and if not a little bit worse. Yeah, this is flatter than it was then, but it's still bad, and we're not going to. So what it's saying is, in order for something to improve, we're going to have to get this to improve. We're going to have to get a 50 basis point rate cut. But even then, is that going to improve the situation, or is that just going to improve the yield curve? It doesn't improve the economics of the situation. It doesn't open up dollar. It's not necessarily going to open up anything. As a matter of fact, I'm firmly convinced that given the current state of affairs, that a 50 basis point cut by the Fed will force them into, they're going to have to supply the market with those dollars, and they're going to just get soaked up. It's going to be very, very difficult for them to lower short-term rates here, because it's going to be signaling to the market again that they're scared, and there's going to come a point where rate cuts won't work. I don't know if that's going to be this rate cut cycle, the beginning of this rate cut cycle, but I do know that the last thing you want to do right now is signal to the market that you don't have any confidence in it. And cutting rates is a sign after only raising rates back to 2.4%, 2.5 or 2.5%. That's not that's an indictment of the economy and of the dollar liquidity. It's not a statement of strength, and so the yield curve still looks terrible. Central banks are still buying the lower end, buying the long end and pushing it down. And they want to have exposure here in this 1 to 7 year range, because they want to have a good stock of these in order to sell to defend their currencies when the dollar breaks out. And that's what it's screaming to me. Okay. I haven't done silver in a while, so I wanted to pick up on what I saw with gold. So let's look at silver. And I know somebody mentioned in the live stream on Friday night, so what do you think of the gold to silver ratio popping back above 85? I'm like, it sounds to me like silver's a screaming buy. I hadn't looked at the chart though. Silver here may actually be maybe telling you something, maybe a leading indicator here where we're expecting to go in gold in a couple of weeks, right? Because this is a massive 1 bar reversal here, right? So we had this big up move in silver off of 14 back to 16.5, and this is a very good, solid, strong uptrend, right, up through February, and then we get this massive down bar back into the 15s. That $16, $16.40 got rejected twice, and then boom, we're down to $15.40 in a week, and then there's no strength at all. A very weak bounce, and then a collapse, and a further collapse. And this $15 area was support in silver for a long time. That one there. I mean, the strong support in this area. We couldn't close for weeks on end. We couldn't close below $15.30, $15.20, and now this week we closed it below $15 after violating last week's low, and last week violating last week's low, and this one violating that one's low. So here we are, four lower lows, 4 lower highs. So that's bad. That's all bad. If you're expecting to see good things out of the silver market, or you've been buying in the $15 range. Well, if you're buying in the $15 range, it's not a big deal. I mean, when I say bad, I mean, what are we looking at? $14.50, $14.30. Yeah, I mean, maybe even $14. $14 on a very, very ugly, kind of spasm, right? But silver's the playthings. Is the plaything of the banks and everything, of the primary dealer banks and the rest of it. Gold is far more important. And silver doesn't have the kind of institutional support. It never will have the institutional support. And that institutional support in silver keeps falling every year. This is not to say that I'm not still long-term bullish on silver, but I am only in the case of silver being bullish when gold becomes too expensive. And when the silver to gold ratio stretches out like this, I do believe silver is a good buy if you're allocating the precious metals. Okay. And, I haven't updated the numbers in a while, but I remember doing this back in like 2017 or 2018 or early 2017, I think, the last time I did this, is to say, if you were to buy silver and gold at the last day of the month, every month since the beginning of the bull market, I think your average buy-in price then would have still been below the average buy-in price, the current price. And I think that's been the case right now. I think that still is the case. So it's one of those things where if you were in a regular buying pattern where you had X amount of money every month and you just buy a small tranche of, small something of gold and silver every day, even if it's a gold stock or a gold coin or whatever it is, or silver coins or, whatever it is, if you were to allocate that money every month, a couple $100, whatever it is, and did that every month, you'd have over the course of a 7.5 year bull market, or almost bear market, almost 8-year bear market, you would have a massive pot. You have a very solid pile of this, right? Having saved, say, let's call it, $3,000 or $4,000 a year over the course of 7 years, you'd have a good solid portfolio of gold and silver. Moreover, your average buy-in price would still be right around where you are right now, which as a savings account, savings is not necessarily, as a savings account, you're not necessarily looking for yield, you're looking for liquidity. Because, you can always sell that silver or gold pretty easily into the marketplace. Yeah, you may pay. All right, and you're not going to pay capital gains taxes on it because you haven't paid any money on it. So at the end of the day, could you put your money into other things? Of course. Were there better places to put it as investments? I'm not talking about it as investments. Remember, I look at gold and silver as savings. And I don't expect to get return on my savings. I think the idea of passbook savings is something that I know I grew up with. And in a zero interest rate environment, you can't expect to get anything off your savings. You certainly wouldn't be getting anything off your savings if you wanted, liquidity, and you weren't investing that money out. Where were you going to put your money for the last 7 years, 8 years, and get positive yield on, say, 3-month money? That's the point. Because you have to look at gold and silver as they're not investments, they're savings. Okay, and I've always felt that way about them. So, and when you strip that out of there, and I don't think that we should all be invested in all things at all times. There's certain things you don't have. There's certain things you have in order to mitigate risk or offset risk. And that's why we have in the portfolio. That's why we have a gold portfolio, which is a proxy for savings portfolio, and then we have a GOATS portfolio, which is meant to be an investment portfolio, and then we have a guns portfolio, which is meant to be a defense portfolio. And it's right now it's only got a couple of things in it, but it's not meant to be. You're not meant to have a lot of hedges against your primary thesis. You're supposed to have a number of positions that you're supposed to have a couple of positions that help you hedge in the short term or in the medium term some of your other exposures. And it's just a way of trying to teach you how to construct a portfolio and how to look at everything that's in your portfolio in different ways. All right. So I'm not sanguine here about what I'm seeing at silver. I think silver is very likely going to see $14.50 before it'll see $16. But again, given the way these markets are playing, anything is possible on a day-to-day basis. But as long as we have a low kind of a wait and see, low volatility environment, things like silver are going to drift lower. Okay, and same thing here, and you can see this in the Dow, right? So 2 weeks ago, we identified this gap up and breakout. This is the all-time high on the Dow back here. I lengthened this chart out so I can show it this week. We've got high pot odds that we're going to break higher, but notice last week we threw an inside bar. Even though we had this great up bar, we still couldn't get a rally in the Dow. Again, the Dow was like looking at all the things that were happening last week going, I don't need to move higher. And I want to kind of break down. So the Dow, again, tested this gap up and breakout. Didn't test the gap, didn't fill the gap. Okay. And it's very possible that this week we could fill the gap and then shoot higher. Because we didn't get a new push higher this past week. And so this inside bar is telling us that something wants to happen here. The market is unconvinced about this gap up. And gaps tend to fill. They just always tend to fill. So if you're trading the Dow this week, I would, still be looking at, this gap is the bottom of this gap is your buy-in, is a buy-in price area, is your buy-in area. As long as you don't violate this low, then, the possibility of a gap down, of a sharp push down, fill the gap, and then push higher is what I think is going to happen. Especially if there's any kind of news this week that would be considered either bearish for the European Union or just bullish in stocks in general. Okay? But, that's where we are. Notice how a month ago the yield curve was higher yield than it is today. And a month ago and a month later, both it and the Dow are up. Go back to gold. Gold is down in dollars. And that's all screaming the same thing. People are positioning to get dollars and get exposure to dollars, not be exposed to other things. All right. So that's what I've got for this morning. If you have any questions or comments on this, please leave them below in the post. And if you have any things you want me to cover, please send me an email, send me a DM on Twitter, and I'm not hard to find. Send me a comment here on Patreon or a private message on Patreon or even on our Slack channel, and I'll be happy to cover a company or a stock or currency or whatever you'd like me to cover. So I'm going to go do my taxes or maybe write something for the first time in almost 48 hours, and I'm kind of getting twitchy because I haven't written anything, so I should probably go do that. All right, you guys take care. You have a great day. Enjoy your Sunday, and we'll talk on Wednesday. Keep your stick on the ice.